Hello and welcome to the show. Today is February 3rd, 2023. Let me start by saying that I am not a financial advisor. This is not financial advice. This information is intended for entertainment and educational purposes only. Today we'll be talking about what used to be stock symbol MMTLP, what has become the private company Knightsbridge Hydrocarbons. If you don't know what I'm talking about, don't worry, you will find out very shortly. In either case, the title of this presentation is Twitter Spaces. So, Knightsbridge Hydrocarbons, just FYI, quick summary. The stock symbol or what used to be the stock symbol MMTLP, has to do with the spin-out of oil and gas assets into a private company called Knightsbridge Hydrocarbons. We're talking about 3.2 billion barrels of oil and natural gas in the ground near El Paso, Texas, close by to a refinery and close by to two pipelines, one oil and one nat gas. Okay, I will defer from saying anything more because I actually went through the entire quick pitch of what was going on in a Twitter space that was hosted by Ollie from Trading Secrets. Okay, so Ollie invited me to this Twitter Spaces where he had a special guest on. Her name was Erin Arvidlund, I believe. Forgive me if I'm mispronouncing the name. And anyway, Ollie asked us to confirm, so I confirmed, and I said, yes, I'll show up. I wasn't quite sure, what was going on, but I said, okay, I'll show up. Anyway, this is a quick rundown of Erin Arvidlund as of Twitter. She's editor, writer. She's a journalist kind of a person. So she wrote some articles for the Philadelphia Inquirer, Barron's, New York Times. She's a best-selling author. She wrote a book about Bernie Madoff and what was going on there. Right now, she's at a place called Pensions and Investments. It talks about pensions and investments, as you can guess. Just from the name, it sounds like they're talking mostly about S&P 500 purchases, mutual funds, buy and hold, that kind of thing. She's got about 3,900 followers on Twitter, by the way. So there you go. This is P&I, Pensions and Investments. It's a website. It's kind of like a news organization, seems like, or an investment journal. If we look at the top, we see that they have a special section just for ETFs, ESG, and defined contributions. If you're not aware what an ETF is, it's an exchange-traded fund. Basically, we're talking about a bunch of stocks, a bunch of bonds, commodities. By commodities, we mean like oil and gas commodities, right? So you can buy an ETF for oil and gas and get exposure to the oil and gas price action. ESG stands for environmental, societal, and global. This is a push that was made by BlackRock, and BlackRock is one of the largest funds in the U.S. They have trillions of dollars in assets, and they basically said they will require all of their stocks that they own to follow their ESG guidelines. So that has an effect on the overall stocks that BlackRock will own, and since BlackRock owns so many stocks, they have an effect on the overall stock market, right? ESG is a big deal there. P&I also talks about defined contributions. Those are, of course, pensions, IRAs, and 401k plans. So as you can see, it's geared and primarily towards pension plans and 401k plans, right? If we look at the agenda, this is the agenda that Ollie sent out. I've got about 4 minutes time to talk about whatever I want to talk about to Erin, I guess. And I went to the Twitter space, and this is what I had to say.
Sorry, Irene. Tony is our expert with regard to data.
Hello, can you hear me? Hopefully you can hear me. This is Tony with Market Moves. So, hello, Erin. It's nice to meet you. I just wanted to give a quick overall summary because the story can be kind of complex. So I just wanted to give my gist as to what the elevator pitch for the story would be. Okay. So my belief is that FINRA created fraudulent counterfeit shares via the U3 halt mechanism. And I'll explain what I mean, right? And on December 8th of 2022, according to FINRA data itself, there were 13.7 million shares of MMTLP that was traded. Now, 9.5 million shares were short shares. And basically what that means is that shorts are shares that are sold before that have not yet been purchased, right? So short shares have the effect of diluting prices until the shares are subsequently purchased, right? Because they're shares that come into existence. They haven't been purchased yet, and the idea is that you buy the shares back at some point later on, and that reconciles everything, right? Now, FINRA issued the U3 halt on December 9th, 2022 for the 9th and the 12th, and they prevented those short shares from ever being closed in an open market. As a result, all of those short shares, that 9.5 million shares, they became counterfeit fraudulent shares, right? Because they were shares that were sold into the market, but were never purchased from anyone, right? The idea was that they would be purchased later on, but they were short shares and they were never purchased. This is FINRA data. Okay. Now, that had the effect of suppressing the share price. That dropped the share price from somewhere like $8 or $9 all the way down to $2.90. Prior to that, there was lots of shorting, which further dropped the share price. Just a few days prior to that, the share price was around $12.50. But all of this shorting, right, which are shares that have now become fraudulent counterfeit shares, that has depressed the market, and that has further prevented the issuance of NextBridge hydrocarbon shares, because all these fraudulent counterfeit shares are out there in brokerage firms, right? But they've been sold to somebody, and the other side of that trade are the longs, the people who have MMTLP shares, and they expect to get a NextBridge hydrocarbon share, 1-to-1 share for every MMTLP share. They expect a NextBridge hydrocarbon share. Now, NextBridge Hydrocarbons has issued 165 million shares total, and they've distributed that already to the transfer agent. The transfer agent has that, but there's not enough shares because of all the shorting that's gone on, and because of all those short shares have now become fraudulent counterfeit shares, that the brokers cannot deliver those shares to shareholders. And that's the gist of what I wanted to say. But what FINRA should have done, what they should have done was they should have issued a directive, right, a corporate action that shorts must close their positions by such and such a date, 12/12/2022, right? That's the first corporate action. The second corporate action they should have done is to inform brokers that on the 9th and the 12th, all trading of MMTLP must go to position close only. What that means is that the longs who purchase shares, they can still sell their shares to shorts. And the shorts who have sold shares into the market without ever buying them, they can close their positions on 12/12, right? So that would have allowed trading to continue and reconciliation to occur, right? That's what FINRA should have done, but they didn't do that. They issued a U3 unexpected, extraordinary event halt, and they said, we don't know what to do. They just panicked, and their actions have caused counterfeit shares to come into the market. Whether or not you believe shorting should occur or naked shorting or whatever, those shares have now become fraudulent counterfeit shares. That's all I have to say.
Thanks. All right. And now I see a lot of mentions of Citadel. Why is that? What is the relationship to this?
So that moves off into the realm of speculation as to who is the other side of the trade, who is the other side of the short, etc., right? So there's some belief that Citadel might be the other side of the short. There's some belief that GTS may be the other side of the short. There's some belief that some people who were on those boards might be on the board of FINRA or something like that. But all of that is speculation, right? I'm just of the opinion that, hey, look, FINRA did this. FINRA needs to fix this, right? So they need to undo their actions, one way or the other, because they've created an untenable event now.
Okay, thanks for explaining that.
Yeah, okay, thanks. That's all I wanted to say.
Perfect. No, thank
Here's some info that Nation Vibes came up with. I think this is the info that Erin Abedlund was looking for a little bit earlier. She wanted to know who the shorts were. And so thank you, Nation Vibes, for coming up with this. He's put together a list of firms and their short positions, looks like. So I'm not quite sure where he got the info from. So Nation Vibes, if you could just let people know, that'd be great. But let's just go with the data as is right now and see what happens, right? So I just took his data for 2022 at least, because that's the last year that we've got full data on, and I just put them into a chart and sorted them from largest to smallest. So the biggest short firm I see is de minimis firms. And they've got about 44 million shorts, almost 45 million. GTS Securities has about 39 million. Virtue America has about 20 million, right? Together, you add up all those top three firms, you're talking about 104 million shares right then and there. 104 million short shares. Add up all the rest, Canaccord, G1, StoneX, Citadel, you're talking about close to 140 million shares that are short. Close to 140 million shares, just from these firms alone. Don't forget, only 165 million shares were ever issued by the company. That means all of these shares, which are short, which are positions that have been open, short positions that have been open, that means that these are shares that have been sold and not yet purchased. These shares are all fraudulent counterfeit shares at this point, and they're made fraudulent counterfeit by FINRA. Okay, all the short shares have become fraudulent counterfeit shares, whether they have locates or not, because these shares have not yet been purchased yet. Doesn't matter if they have locates, doesn't matter if they're naked, doesn't matter if they've borrowed the shares, right? The shares have not been purchased yet. It's an open position. They are now all fraudulent counterfeit shares. Okay. Next, let's just look at the top three shares alone, top three firms alone. At the height of the stock price, which was $12.50, these top three companies were looking at a problem of about $1 billion total. All right, the top three firms. De minimis was looking at a $560 million problem. GTS Securities was looking at a $480 million problem, and Virtue America was looking at a $260 million problem. And they freaked, right? They freaked out because they said, "Oh shit, we got to pay $560 million." So what did they do? They shorted like crazy again. They dropped their stock price from $12.50 all the way down to $2.90. They freaked. Why did they freak over $1 billion? Surely they would have $1 billion. They'd be willing to accept their loss. Well, first off, these guys are total dweebs, whatever. Okay, these guys do not want to accept their loss, but they were looking at a loss of $1 billion. But they were afraid. They were afraid of this. They were afraid that the share price might reach its intrinsic value, right? Intrinsic value based upon the amount of oil in the ground, the value of that oil in the ground, the 49% working interest, all that stuff, right? It's close to $100 a share, intrinsic value. That meant that their $1 billion problem could very easily be a $10 billion problem. And they were afraid of losing $10 billion. Ooh, boo-hoo, might lose $10 billion. Well, word got out. Everyone knew that they were afraid of losing $10 billion. They knew that these guys are afraid of $1 billion becoming $10 billion. You know what? Retail said basically, okay, you up the ante, we're going to up the ante. We're not going to sell you for we're not going to sell for anything less than $1,000 a share. Screw that. You were afraid to take your loss at $100 a share. We'll up the ante as well. $1,000 a share. See what you say to that. Now they're looking at a $100 billion problem. Because they were afraid of a $1 billion problem becoming a $10 billion problem. You know, they shorted like crazy. Retail said, okay, fine, short like crazy. We won't sell now for anything less than 1,000. Now your $10 billion problem that you were afraid of has become, you know, a $100 billion problem, right? A $100 billion problem. But this was just, you know, people like me who were reasonable. $1,000 a share, you might think is expensive, but it was reasonable. A lot of people were calling for $5,000 a share or more. That meant that $100 billion problem would now be a $500 billion problem. Those guys freaked out. Word got out, you know, everyone freaked out and they said, hey, look, we don't know what to do. Our company might go bankrupt. Boo-hoo. And they ran to, who did they run to? They ran to FINRA. They ran to their buddies at FINRA and they said, hey, look, you know, our company might go bankrupt. You got to pull a U3 halt. And FINRA said, well, what cause do we have? Well, come up with something. We don't care. So they came up with a settlement problem. They said, oh, we don't think that if anyone bought a share that they might have those shares delivered in time. That's what they said. But the reality is they could have gone to a position close only, in which case there's no settlement problem. The only people who would be closing positions are people who already have open positions. That means if you're long, you already have the shares, you should be allowed to sell those shares because you have the shares, right? They're yours. If you're short, you sold shares that didn't exist. You artificially depressed the price of the market. And you need to close your positions because now you've created, if you never close your positions, your shares become fraudulent shares. fraudulent counterfeit shares. If you did that, then that basically means that you're responsible for fraud, right? Do you want to go to jail for fraud? Because that's what you're looking at. That's what the deal is. Anyway, that's where we stood. Let's move on to another topic now. Let's talk about the actual intrinsic value of oil and gas in the ground. Bird Lady and Sea Plant, they had a Twitter space, which is very cool and very much worth listening to. They talked about They talked about the 3.2 billion barrels of oil in the ground in West Texas. They talked about drilling there. They talked about going, vertical drilling versus horizontal drilling, what it costs to do all this stuff. What it means when you lose a drill bit. It actually doesn't mean the drill bit's lost. It basically means it would cost more to recover the drill bit than to actually just buy a new drill bit. So basically, its effect is fiscally lost. You can still get it if you wanted to, but you got to spend like twice as much as it costs to buy a new drill bit, right? They go over all this stuff with you, and if you're new to the oil and gas business, it's a good listen. It's only about an hour. It's not bad. They talk about working interest versus revenue interest and all that as well too. So it's definitely worth listening to. I would check it out. Just be aware, Twitter Spaces is time limited, meaning it only exists for a certain period of time. I don't know how long that time is, but I think it's like 30 days, 60, 90, somewhere around there. Between 30 to 90 days, I think. So check it out while you can. It's a time limited thing. Okay. And that's basically all I had to say. I wanted to say that, word is getting out. As word gets out, then the reckoning will come. Okay. We know that it's been 51 days. It's been over 50 days now since FINRA pulled its U3 halt. Retail is not going away. FINRA was hoping, maybe retail will say, maybe they'll go away. Maybe they'll get bored. Well, quite frankly, there's a lot of money on that table right now. Retail knows there's a lot of money on the table. We want our next bridge hydrocarbon shares. You can't deliver it. We want you to undo what you did then. Either deliver the shares, which means go out to Next Bridge Hydrocarbons, beg them for shares at whatever price they give you, and then buy it and then deliver it to retail, or you go and you reopen trading, you undo what you did, and then your friends, of course, would naturally go bankrupt because that's what you did. You went off and you tried to prevent your friends from going bankrupt, but everyone knows that, so you better undo what you did, right? So retail is very well aware, and we are not giving up. We are now more determined than ever before. And there's been a lot of pain and suffering that's gone on in these 51 days, and it's not going to be for nothing. The longer you take, the more blood retail is going to want. Right now, we want a lot of blood. We're going to want even more blood the longer it takes. It's not going to become pleasant in the future, FINRA. Fix the problem that you created. Fix the problem you created, and maybe you can get out of this and still survive. Okay, we're going to Congress, and we're going to Congress. We're going to the SEC. FINRA says that they're not beholden to any court. Well, fine, don't be beholden to court. A congressional act gave you existence. A congressional act may take you out of existence. Okay. Think about it. This is somewhere in the range of $100 billion problem, I think. $100 billion problem. Okay. Is FINRA worth $100 billion? Is your existence worth $100 billion? Or is it worth, I don't know, $30 trillion because you oversee the entire stock market? Think about it. Think about it. Anyway, I'm not a financial advisor. This is not financial advice. This information is intended for entertainment and educational purposes only. This is Tony with Market Moves, talking to you about Twitter Spaces and what I see going on. Okay. Talk to you later, and this is it. Bye.